Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny, Bert, the Dividend Diplomats. Lanny jumped right in. You see what's new today, everybody. Looks like Christmas came a little bit early. We're repping the swag here.
Santa Diplomat is here.
Yeah, Hanukkah was a few weeks ago, though, so maybe this was underneath the menorah, not for our family.
Could be.
Yeah, but in all seriousness, everybody, we're here to talk to you about 3 undervalued dividend stocks that I'm going to be watching throughout the rest of the year. So get hyped up, get excited. We are back together, not a Zoom video here, and we are going to crush it and share these stocks with you.
Guys, before we dive in, do us a favor, smash that subscribe button, give this video a nice thumbs up. Take a look at this hot swag right now, perfect for your last minute Christmas gifts, the Dividend Diplomat wear.
The mug.
The best coffee mug, really keeps your coffee warm, motivates you to keep pursuing financial freedom.
Store's got some water bottles too. It's got some laptop stickers. Both fit great in that stocking if you're still interested. But in all seriousness, everybody, we also do have that swag store, so look at it below. We're excited. We're repping it. These are actually pretty comfortable.
Comfortable, heck, soft cotton. But guys, 3 dividend growth stocks to buy right now. Bert put this great watch list together as we head into the Christmas holiday week. We've only got a handful of days. The stock prices are going to be as of December 17th, 2021. Stock market actually had another down week, Bert.
Yeah, it was interesting. It was flat, went down, shot right back up, then came down and ended the week on a nice little tanking towards the end, as Friday was a pretty red day in the broader market.
Show.
Yeah, Frank the Tank just running around here. We love it, but yeah, the market, it closed at 46.20 there for the S&P 500. It did hit above 4,700 this week. It didn't break below 4,600, but the market just can't break 4,700 consistently and keep pushing towards 4,800. It hits it and then keeps falling down. That's been the theme of the month, at least.
You know, the Fed met obviously on the 15th. Future, they're going to start the tapering even faster, possibly being finished by March of 2022. Expectations of interest rates to rise in the second half of 2022 through the end of the year. The Omicron COVID-19 variant is out there spreading like wildfire. Our Cleveland Browns had pretty much over 21 plus players on the COVID-19 list.
Yeah, they had to bump the game back. The NFL's feeling it. Inflation's obviously a big item as well. The gas is still expensive. Cost of everything is going up. Check your grocery bills and all of that too. So it's an interesting sentiment that's hitting the market, which does explain why it just can't break through that record-setting 4,700 plus mark.
But Bert found 3 undervalued dividend stocks to buy right now. One is a Dividend Aristocrat. The other just came back with some amazing dividend growth news. And the other one just shows a lot of signs of undervaluation. Yeah,
I own 2 of the companies already in my portfolio, and the third one we are going to discuss is going to be a possible new purchase, which has been rare lately. I haven't been adding a lot of new stocks to my portfolio after Lockheed, so let's jump right in. I think we're excited. Are we ready, Lanny?
All right, Bert. Now, before we jump in, obviously, we're going to look at the Dividend Diplomat stock screener. 3 metrics. 1, the price to earnings ratio. 2, the dividend payout ratio, and 3, the dividend growth rate with the bonus yield, the bonus metric dividend yield.
Darn right, Lanny. First company, LYG Plot, ticker symbol LEG. They were on a watch list of mine last month, I believe. The stock price has been coming back down after it set some of those impressive highs earlier in the year. We grabbed some LYG Plot in 2020, kept building that position. I've owned it for a few years, bought it on the downside. Obviously, the stock price shot up. Now it came back down, so here we are once again looking at LEG. Been hit with inflation like so many of the other companies. A lot of the furniture and the stuff that they produce, that they sell, is overseas, so they're dealing with some of the supply chain issues, increased costs, which in the furniture sector is not the easiest hurdle to overcome.
Not the easiest hurdle. Stock price has come down so much this year. Year to date, they're actually down over 12%, finishing at the market close on December 17th at $38.03. So Bert, you want to dive into that first metric, the price to earnings ratio?
Yeah, so with that price of $38.03, their forward EPS projections per Yahoo Finance are $3.03. That gives you a PE ratio of 12.55, still half of the PE ratio of the current S&P 500, which is in the mid to high 20s on a regular basis.
It's incredible. I mean, a PE ratio that's well below, the S&P 500, more than likely below a lot of their competitors, 12.55. To get into that second Dividend Diplomat stock metric, the payout ratio. And, Bert's favorite perfect payout ratio is between 40 and 60%. Now that's taking that forward dividend, per share over the forward earnings per share. So currently they pay on an annual basis $1.68 or 42 cents per share per quarter. That equates out to a payout ratio in the perfect sweet spot of 55.5%.
It's important to see a payout ratio below 60%, particularly with some of the headwinds that they are facing that could severely impact their earnings. So if earnings were to fall 10%, 20% below expectations, the dividend is not in jeopardy because the payout ratio will not drop or will not increase above 100%. I apologize there.
There you go, Leggett and Plot. So the third dividend stock metric, dividend growth. They've been growing their dividend now, again, for over 25 years because they're a Dividend Aristocrat. Always love seeing a Dividend Aristocrat on the list. They're actually almost at 30 years of consecutively increasing their dividend. They just made it again this year.
Yeah, they held out from increasing their dividend as a part of the pandemic, and then at the beginning of November, they announced a nice 5% increase in their dividend, increasing it from 40 cents per quarter to 42 cents per quarter, which is huge because a lot of these headwinds that they are facing were existent at the beginning of November. So management still felt comfortable enough to increase that dividend by 5% despite some of the issues that they face today.
Now, the 5-year average growth rate is only at 4.39% for LEG. So Bert, that bonus metric, that sweet spot, that little cherry on the top, the dividend yield.
A 4.42% yield is going to catch anybody's attention, especially for a Dividend Aristocrat. It makes it even better when you see a payout ratio that's in the perfect payout ratio range, and the fact that the company just announced a 5% increase. So that's a nearly 10% dividend factor, 4.4% yield plus 5% dividend growth. Fantastic.
Now, in summary here with Leggett and Plot, they have a low PE ratio at just under 13, payout ratio below 60%, dividend growth for over 29 years at just under 5%, with an almost 5% yield. Bert, I can definitely see why this is on your stock watch list. Undervaluation in the metrics, as well as room for safety in the growth and the current dividend.
Exactly right. So let's see if you feel the same way about company number 2 on the watch list. VIACOM, CBS ticker symbol VIAC.
Man, VIACOM back on the watch list. A very, could be even one of the meme stocks this year, right?
Yeah, it was. That pushed it over $100 per share.
Who sold out over 100? Let us know in the comments.
I thought about it at the time. I thought I should have taken some of the gains off the table, and in hindsight, I probably should have taken some of the gains off the table when it was above 100. But regardless, we invest for a long...
Bert was like, it's going to go to 200.
Yeah, keep those memes coming. Get it to 200. But in all seriousness, we like the fundamentals of this company. We like the business model. We like their content library. That's what sets them apart from a lot of the other competitors. They have the CBS, the Paramount Plus. They have all the content, all the years behind it, all the movies. They're producing new movies. Content is what companies are looking for here in 2021 going into 2022 to help them compete with all of the other people that are struggling to produce quality content. So that's why I like Viacom for the long run, no matter what. And I'm pumped up when I saw their share price end at $29.52 this week, so I figured I had to put them on the watch list and evaluate them.
Had to do it. They had some pretty big movies released in 2021. A Quiet Place 2, I believe, came out. That was heavily spread throughout. SpongeBob movie
coming to America.
Yeah. Next year it's going to be pretty wild.
Yeah,
the next Scream is coming out.
It's coming back.
You gotta love. You gotta love that.
Let's look at this list here. Also,
Top Gun, Maverick,
another Jackass movie's coming
Sonic,
back. Mission Impossible.
Not there. Number 1, not 2, but number 7 here on the list.
Oh, that Bee Gees biopics actually going to be pretty interesting too as we're going through it.
Bert could finally wear his normal clothes.
Yes, all right. But no, seriously, you can see some big names. Great things are coming there. They have the Paramount Plus that's launching, competing with everybody else. Just interesting companies. So let's see them through the metrics. That PE ratio, 29.52. Their forward EPS is $3.84. That gives a PE ratio of 7.69. That might be the next installment of Mission Impossible right there with that PE ratio.
Look at that. Below 8 on the PE ratio. I don't even know what to say. Obviously, earnings are pretty hard to expect just with COVID going on. Not sure what's happening at the box office and what's going out to streaming, etc. But they've been doing very good, I think, despite all the headwinds. Get into the dividend stock metric number 2, the payout ratio. They currently pay a 96 cents per year, for one share, obviously spread over 4 quarters. 96 cents over that $3.84 is actually only a 25% payout ratio. Very low.
Plenty of room to keep increasing that dividend going forward if they choose. Plenty of room to keep producing content to keep competing with everybody else. As we learned from the AT&T Warner Media split, this isn't the cheapest industry to do. It's going to take a lot to compete with some of these people in there. So you probably don't want to have too high of a payout ratio if you're Viacom CBS. So 25% seems fantastic and a great mark there for a content king like them.
Now, what does the dividend growth rate look like? It's kind of an interesting dividend growth that they do.
Yeah, because if we break down Viacom, they haven't really increased it recently per se, right? And their history's kind of short as they've put the new spin-off together from a few years ago.
Fairly new. They pay a 24-cent current per quarter dividend. That was way up from 18 cents. They did that right before it all happened. They went from 18 to 24 cents. Yeah. So if you do the math, 6 divided by 18, a nice 33.33% increase.
Haven't necessarily increased it too much since then, so that's...
I would anticipate an increase come, again, mark my words here, December of 22.
Let's see, December 2022. So we'll see if they return to that dividend growth, and if not, we'll see. But regardless, they have the room to do it if they want to. That's, I think, the important thing. That bonus metric, the dividend yield, currently their yield is 3.25%. So even with the low payout ratio, even with the lack of dividend growth since they increased it right before the new company kind of spun off or did whatever they did in 2019, it's above 3%.
Now, that was that dividend growth stock, Viacom. P ratio below 8, payout ratio well below the threshold at 25%. Above average dividend growth rate on average over 8%. Expect one 12 months from now. If they do one this month, congrats, it's awesome. With a nice dividend yield that's now swelling up well over 3%.
Yep, so those are the 2 stocks that I own in my portfolio. I already have LYG Plot, Viacom CBS. We'll look at the potential new entrant. Dividend stock number 3 is TD Bank,
man.
Ticker symbol TD.
Hey.
Take it easy, you gotta take it easy, right? But
Toronto,
always
Dominion
looking
Bank.
for banks to add to our portfolio.
The Canadian bank.
Yeah, when we reviewed the Canadian banks several weeks ago, just makes sense looking at the metrics. All the banks are in the high 3% with a strong dividend growth rate, and they have strong balance sheet. All the metrics there. Check the video out for more detail about them. We don't want to turn this into a Canadian banking video. What I love about TD Ameritrade, as you're going to see as we go through the metrics, is I love their banking presence in the United States and Canada. I always had loved the TD Ameritrade branch that they had. Unfortunately, they decided to sell it off to Charles Schwab because it wasn't just valuable to me, it was valuable to Charles Schwab. So they sold it off. They took a lot of cash. They were going to focus back on the core banking.
A lot of cash, a lot of money. It's a big deal.
Yep, but
it's worth over $26 billion, this merger value. Charles Schwab, if that's a platform that you guys use, let me know in the comments how it works for you. I'm always looking for the next platform. But this is about TD Bank right here. So
let's go through the metrics here.
So what price are they right now as of December 17th?
$73.01. Their forward EPS is $6.34. That gives you a PE ratio of 11.5.
Wow, pretty undervalued. I mean, banks for the most part are in that 10 to 13 range anyway. Yeah. So they're in the ballpark. They really had a very nice positive news that we'll get into later. But to get into that dividend payout ratio right now, based on that forward dividend right now of us estimating it at $2.78, the payout ratio is well within, the 40 to 60% range at 44%. Plenty of room to pay it, plenty of room to grow it, and grow it they did. Because Bert, talk about that third metric.
Yeah, their 5-year dividend growth rate is 7.96%. They've increased that dividend for 10 plus years, but the big news was what they announced at the beginning of December. They increased that quarterly dividend by 13%, and they also announced a 50 million share buyback program.
50 million shares being bought back, 13% dividend increase.
Cash going to shareholders. That's what I like about TD Ameritrade.
If you're a TD shareholder, bust that like button right now. We love the Canadian banks, and this one is definitely been a consistent player and payer.
And currently their dividend yield is 3.81%. It doesn't have the highest yield of the Canadian banks. Canadian Imperial has more. Bank of Nova Scotia has a higher yield, but 3.81% yield with a company that just increased its dividend 12%. Huge factor.
Huge factor. Now to summarize, again, TD had a P/E ratio below 12, a payout ratio below 44%, a dividend growth rate at 8%, with a dividend yield almost 4%.
Yeah, so I mean, of the three companies here, going through them, Leggett & Platt, Viacom, TD, if I'm going to rank them.
What stock are you about to buy?
I'm actually kind of interested in TD and building that new position. I know I said I wasn't going to.
New position, a new stock position for Bert the Hurt.
That's right. I like it. I mean, again, I always like banking. The metrics make sense. Just adding another Canadian bank. I'm still debating if I want to do it in my traditional account or as a part of our Roth contributions for the year. So it'll be interesting to do more research on that, especially with the foreign tax potentially. So add any comments in there too and any links to any articles you may have about that. Leggett & Platt and Viacom are interesting. I might add a few shares to the Viacom position and then Leggett & Platt last. So, but
Bert's feeling dangerous.
Yeah, so TD1, Leggett & Platt 2A. No, I'm sorry. TD1, Viacom 2A, Leggett & Platt 2B.
Wow, there's the order of operations for Bert. Bert, how many shares of TD are you interested?
I want to at least probably get the position to $1,000 to $2,000 soon. Yeah, and the one nice thing about TD is they pay that dividend at the end of January too. So their ex-dividend date is January 7th, 2022.
So you got time to capture that first divvy.
Yeah, and it's in an off month too. So as I look to build my income and balance it out throughout the year so that when we get financial freedom, the cash is coming in all 12 months as high as you can.
That's the goal.
That's the goal. It would be nice to boost up our January income with at least $1,000 to $2,000 investment in TD.
There it is, guys. Let us know in the comments which of these three dividend stocks that you own. Of these three stocks, which three or which out of the three are you buying right now? If you haven't already, definitely give this video a thumbs up. Don't forget to subscribe. Check out the swag store. You know, you got the coffee mug, the sweatshirts. Again, that was Bert the Hurt and Lanny from the Dividend Diplomats.
Over and out.